What is going on, investors? Hopefully, guys are doing well out there. It is time for the biggest earnings event, really, that we've seen in a long time. I remember doing these earnings videos, and then, sometimes you've got three companies in a single day. Today, we have four. I'm joining you a couple of minutes before the market closes, doing a little bit of a sound check, make sure that everything is working. I'm my own producer over here, so I'll be working the chat. We'll be working the earnings. We've obviously got a huge day, and everything that my family decides to eat later today is hinging on today's earnings, because we've got Microsoft earnings, which I've got a large position in. We've got Meta earnings, still got a large position in Meta. We've got Amazon earnings, happens to be one of the largest positions I have, might be the largest. And we have Google as well. Got a lot of things to talk about. Obviously, we've got multiple things to cover. On today's video, I'll try to go through as much of this as I possibly can, and we'll do it in as quickly as possible, right? We've got these earnings calls that I'm sure a lot of people want to check out and view on their own. I'm certainly going to do that for premium subscribers. We'll do videos on all four companies. So it's going to be a late night. And this is kind of how I feel right now. I've got tens of thousands of dollars in each stock, and we're pacing the room, and we're having a good time. There was a lot of FUD in terms of data centers. Some of that is being debunked. There's been this headline that has been perpetrated over the past several weeks that half of planned U.S. data centers have either been delayed or canceled. It's not what I'm hearing. It's not what Dylan Patel of Semi Analysis has. And he has basically the satellites pointed at these data centers 24 hours a day, 7 days a week. That's not what I'm hearing. There are plenty of delays. I don't see a lot intentionally being canceled. Now, obviously, on today's video, in about 2 minutes, the markets will close. And we've got a huge earnings day with Meta Platforms obviously reporting their earnings. Year to date, the stock has gone nowhere. We'll discuss here in a second what the expectations are. The current quarter, obviously important, but even more important is the guidance they give and the CapEx. Meta is the one stock out of all of these that is not turning around and re-renting out their compute. So when we talk about Amazon in particular, they're obviously using the bulk of their CapEx on compute that they turn around. The minute they turn it on, it's a revenue generating asset. For Meta, it's a little bit different. They're spending all of this money. It's a lot different, actually. They're spending all of this money and they are using it all internally. Now, they could start their own cloud in these types of things, but right now, Meta is deciding to use this all internally. I think it's a good move because they have competitors that aren't as well capitalized as they are. What's up, John? How you doing? Good to see you in the chat. And I mean, we've got a huge day. So we'll talk about Meta, obviously, and we've obviously have Alphabet as well, otherwise known as Google. Now, the shares have just rocketed higher. Even year to date, you're up 11% over the past year. You're up 115%. Now, obviously, the 1 year chart is lapping kind of the lows that you had from the tariff situation that you had a year ago. So Google reports their earnings. We'll discuss what to expect there. Slightly lower growth rate, but higher valuation. We'll take a look at Microsoft. Tell you what Microsoft does in the after hours could hinge the entire software industry. And then finally, we'll get to Amazon as well. Amazon has been on a tear year to date, up 13% over the past year, up 40%. Companies expecting massive amounts of revenue. It'll all be about that AWS growth as well, which is expected to continue to accelerate. We'll monitor these, obviously, as we're awaiting earnings. You tend to see some type of pop in the after hours. To close the day, I mean, it makes a lot of sense to me. The S&P 500 was essentially at all-time highs, and it didn't go anywhere. You had the Federal Reserve making an announcement that they're holding rates steady, and the S&P 500 basically holding steady while four of the largest companies in the entire universe decide to report earnings after the bell. The QQQ also roughly flat, although there were some stocks that absolutely rocked today. NXPI comes to the top of the list. This thing was up. Oh my goodness, this thing's up 25%. It hit it. That's probably an all-time high on that one. You also had Intel up another, oh my gosh, up another 12%. I've got a massive position in this one as well. My goodness, that is an incredible move. Semis bounced back this week. Obviously, depending on what these companies announce here in a moment. In fact, we have Amazon down 5% in the after hours. That probably means that we have some type of earnings coming out from Amazon. We'll get to those in a moment. It looks like initially down 4%. What I will note about Microsoft in particular, their shares are up about 1.6% right now in the after hours. Microsoft announces their guidance usually on the conference call right around 3 p.m. Pacific time. It's usually like right on the dot. And so sometimes the stock can move, and then you get to that 3 p.m. hour, and all of a sudden Microsoft moves hard in one direction or another. Right now, Meta, I'm seeing moving lower by about 5%. They're pretty good at getting this stuff up on their earnings release. I mean, this is the only way I know how to do it. And here we have Meta. We'll start with Meta. We'll see what their earnings look like. The revenue came in at $56.3 billion. Wall Street was expecting right around that much. In fact, the high-end estimate was for $56.5 billion. They're coming in right at $56 billion. Their costs and expenses up actually a little bit more than revenue growth. Their income from operations growing 30%, net income growing 61% to $26 billion. But I'm sure that's not the full story. You've got your daily active users. This used to be a big metric that everybody kind of pegged on, but at this stage, everybody understands what's happening over at this company. Average price per ad was up 12% year over year. That's probably good. The other thing I look for is ad load. So ad impressions, how many ads are they just stacking more ads onto the platform? Ad impressions delivered across the family of apps increased by 19%. So you increased ad impressions by 19% and revenue grew 33%. So some of that revenue obviously comes at potentially the dissatisfaction of more ads on the platform. We expect second quarter revenue to be between 58 and 61. In my opinion, that's a little light. Oh, well, yeah, that is a little light. Wall Street was expecting $59 billion for Q2. The high-end estimate was for 61. So for Meta to print 58 to 61, a little bit of a disappointment. I can see why shares are down. Also, just technically as well, we'll go through the charts maybe a little bit more in depth here in a moment when we get through the numbers. Meta was set to either break higher and then meet resistance or move lower, and in my opinion, create some opportunities lower. They expect total expenses to be between 161 and $169 billion. That's unchanged. That's probably good. There's a CapEx number here. They expect, oh my goodness, this is going to move things. They anticipate 2026 CapEx. They up this every quarter, and this might be frustrating investors to some degree. $125 billion to $145 billion of CapEx this year. The previous guidance they gave you 3 months ago was for 115 to 135. So they essentially bumped it up $10 billion on both the high and the low end. So you met expectations. Some people might say somewhat exceeded expectations when it comes to guidance, but your CapEx range definitely higher over at Meta. I do want to dive into some of the other numbers. I mean, it's a wonderful company. They printed $10 billion more to the net income line. But obviously, when you're spending this much on CapEx, it doesn't show up there. We'll show it to you when we get to cash flows. The balance sheet is about what you'd expect at these tech companies. However, the long-term debt has ticked up, obviously, a lot over here. It's sitting about $58 billion. Where you get the full story with what's happening with these companies, with this CapEx spend, is on the cash flow statement. So you come down to your cash flow statement, you pull down this net income number of $26 billion. Again, that was $10 billion higher than last year. In turn, you get to add back in stock-based compensation. They have a lot of depreciation as you're building these data centers and those types of things. So last year you did $24 billion, up to $32 billion of operating cash flow in a quarter. And I say this every time we go through these companies is that we're almost numb to this, but that is $32 billion, not in a year, not in 500 years. That is in 3 months. The company is doing over $10 billion a month in free cash, not free cash, but operating cash flow. Free cash is this $32 billion number minus your property, plant, and equipment, which came in the most recent quarter at $19 billion. So when the company says that they're going to spend, what was it, 130 to 140 billion dollars, wow, they are going to continue to accelerate it. Obviously, what they are now doing is they're pausing their buyback. Look what they did this year. Last year, they bought back $12.7 billion of stock in the quarter. This year, they didn't buy any of it. Okay. And this is in a quarter where Meta stock year to date is basically flat. We are seeing in the after hours now the stock moving lower by about 6.5%. Doesn't surprise me necessarily. Technically, you were hovering right on the 200-day moving average. So it was a little bit of support resistance. And if it was a good report, the good report would have needed stronger than what they were guiding for revenue wise. I just want to give a quick check on Google, and just so they're up 3.5%. So we'll check on them in a moment. To give you a rundown now, Amazon is positive and Microsoft is flat. We'll check on those here in a second, but I do want to check on one more thing with Meta. Is I like to come all the way down to the bottom, and let's check on family of apps. I famously called for Mark Zuckerberg to get fired. This is probably 300, 400 points ago on the stock. So clearly Meta's board of directors made the right decision by keeping Mark Zuckerberg around. But my impetus for saying maybe this guy should go spend his money on Reality Labs. Maybe he should spend his own money on this. It generated just $402 million in the quarter. Last year was $412. It lost $4 billion last year, lost to $4.2 billion. So at least we're moving in the right direction there with Mark. So just to understand, now I understand this is bringing in some of the Ray-Ban glasses and these things really are quite amazing. So I appreciate everybody in the chat. Hopefully you guys are doing good. Hopefully we're hitting the expectations in here, guys. I mean, right now, I would say I only have Meta in a retirement account. And so my kids can still eat tonight, even though it's down 5.7%. In fact, I think this creates buying opportunities. We'll see how that shakes out. Obviously, the conference call. Amazon is one. Boy, we need that. Microsoft, I actually have in a retirement and a trading account. We're seeing that one waver. Let's move over to Google and see if we can get their results up. Maybe they're not even up yet. No, we do have Google results. Let's get to them. I like to go the old school way. Some people look at slides. I like to look at these things. I like to skip over some of the preamble and get right to it. Revenue over at Google in the quarter was $109 billion, almost $110 billion. The expectations for the company, wow. So the expectations were for 107. The high end was 110. So they're coming underneath that, at least from that perspective. Operating margins is really kind of how you think about it, from 34 to 36%. So they expanded margin there. Net income skyrocketed. Maybe some of that off balance sheet stuff, investments in some of these other companies like Waymo and Anthropic, maybe contributing to net income. We'll see that here in a second. But what I like to look at is the different segments. You obviously have search results. Everybody says search is dead. Apparently it's not. 50 billion up to $60.4 billion in revenue on search. YouTube. I don't make anything on YouTube. And that's maybe a wrong way to say it. YouTube doesn't pay my bills, thankfully, because you don't really make a lot of money unless you do a lot of clickbaity stuff. And $9 billion in ad money last year, up to $9.9 billion. So somebody's making some money there. And you have their Google network, which is your affiliate network. And it doesn't surprise me, this is down. Web traffic is down. SEO is down. There's more agents hitting sites. There's more sites behind paywalls. In some ways, the internet has gotten less free and less accessible. And that's impacting the Google network. That's down to $6.9 billion. Last year was $7.3 billion. So the ad business is now $77 billion. They have these subscriptions as well here on YouTube. other places, YouTube TV, that went from 10.4 up to 12.4. Wow, that's massive growth. Now, here's what we always look for is Google Cloud. Look at this, guys. I mean, can you believe this? $12.6 billion on revenue of Google Cloud last year. What was it this year in the most recent quarter? I'll zoom it in so you guys can see. $20 billion. You almost doubled your cloud. Look at the operating income. So it just turned profitable maybe a year and a half ago or so. Look at the Google Cloud. Last year, you made $2 billion off of $12 billion. Now you had $20 billion in revenue, and you made $6.6 billion. Now, the ad business and all the other services that they have, Android, Google Play Store, all that stuff, made $40 billion. But man, the cloud business obviously is catching up. And I mean, that's insane. That is just a big number. Obviously, this company has, in my opinion, the best balance sheet in all of big tech. However, a little bit of a change I see in the most recent quarter. They still have plenty of cash, $126 billion. Where I'm seeing the change is you're down here at long-term debt from $46 billion up to $77 billion. That is a massive addition to the debt line. Now, obviously, we know what the heck are they spending all that money on? Your property, plant, and equipment from 246 up to 281 over at Google. Now, here's more kind of a consolidated view where you don't get the different segments. You had your total revenue at 109, your total costs and expenses at 70. You printed $39 billion of operating income. So off the top of my head, you added $19 billion of revenue. You added roughly $9 billion to operating income. You flow down to a net income number. You had some other income and expenses here. So I don't, off the top of my head, I don't know what this is. You'd have to kind of dig into the report, but sometimes you recognize gains on investments here. This is the way I analyze these companies. It certainly benefits the company, especially if this is a realized kind of other income. But I analyze companies from operating income. You can look at net income as well, EPS, all those types of things. But here's the big thing with Google, and we'll give a check on it in the after hours. So that's popping. So technically, Google was at an all-time high, and it was making maybe a double top formation. Now you're breaking out and you're breaking higher. This is very, very, very bullish for the stock. And look, if the stock would have gotten rejected here, it's not like it would have been bearish at all. The stock chart still would have been amazing. You would have had support back at the 200-day. I mean, there's plenty of areas of support lower for the stock, but the fact that you are breaking to a high at this moment, incredibly bullish for the stock. There's going to be algo traders that might feel like trading that. Now, if you don't feel like trading this and you're like, oh, I don't know what to do with Google, now you're letting it roll and you're buying the back test to the top of the channel. That's the play, at least technically. Looking good in the after hours. Let's take a look at the cash flow statement. Net income was $62 billion. I see. So here's your loss or your gain on debt and equity securities. So it was a massive gain. My guess is this is some kind of paper gain, maybe on their Anthropic investment, or maybe it's Waymo. My guess is probably Anthropic. And some other bets. Oh, SpaceX maybe too. I think SpaceX is maybe, I think they own like 10% of SpaceX or something like that. So that is getting recognized here. So they recognize $36 billion, but it's not cash. So on cash flows, you strip that out. Now up here on net income, it gets added in and then it flows all the way down to EPS like it actually matters, but it actually doesn't in my opinion. Not that not owning SpaceX and Anthropic is great for Google. I mean, it's amazing. But when I analyze these companies on a quarterly basis, I would stick to the fundamentals and stick to the business, the core business, because that's what matters. The other stuff is great, especially when you get to this scale. You can make these big investments in these companies that could become huge, like SpaceX and Anthropic. But at the end of the day, what they rely on is their core business. And that's what the stock largely is going to trade on in the future. $62 billion of net income. You strip some things out, get to add things back in, stock-based compensation, depreciation. I mean, this is a good number. We talked about how they went $9 billion higher on the operating side. So what I like to see is that also flows through to the operating cash flow. So you went from 36 up to 45 billion over at Google. That's a good sign. Now, why is it a good sign? It's because your property, plant, and equipment, this is your CapEx. $45 billion of operating cash flow minus $35 billion. That gives you your free cash flow number. So you're at a free cash flow number of $10 billion. Now, $10 billion is amazing, right? To any individual out there. But obviously, just understand there is a portion of Wall Street that looks back to what was at Google and the rest of these companies. And we showed you Meta was cash flow. No, they weren't quite cash flow negative from a free cash flow perspective. They earned 32, they spent 19, but it's potential you could go, close to negative or it's certainly getting tighter over there. Over at Google last year, you had $36 billion of operating cash flow, and I say only $17 billion on property, plant, and equipment. You've doubled your CapEx spend. So that's what we're going to be listening to on the conference call. Like, are you going to double it again? They're probably not going to give us, indications on that. But as one of the reasons why a stock like Intel is just blasting off is they said on the conference call that they basically they didn't say it in so many words, but they basically told you they have orders into 2027. So these companies are already committing into 2027. My guess is with NVIDIA, you'll get a similar type of read through. NVIDIA's I'm seeing down just fractionally down in the after hours after a monster run. Broadcom down fractionally in the after hours as well. We'll turn our focus back to Google, which is roughly flat in the after hours. You'd like a green candle above 350 tomorrow would be bullish technically. But if you want to nitpick the company, people are going to say, my gosh, there's no extra cash flow. Now, here's the bull case argument is you go back all the way back up to the Google Cloud and you say, well, what are they investing all of that CapEx in? Well, they're investing a lot of it into the core business, obviously, but you're investing a heck of a lot of it into Google Cloud, which went from $12.3 billion up to $20 billion and churned out over three times more operating income. And so if you continue, the growth rate is going to flatten out. But even if the growth rate flattens out a little bit, my goodness, you should be spending this money on CapEx, and it's a good thing. Now, did the company repurchase stock? No. So this is a big change for these companies. Obviously, if you've been following my channel for a while, I mean, we recap the news on these companies every Friday, and we're doing earnings videos all the time on these companies. And yeah, the repurchase of stock, that was the story with these stocks. And you see in the most recent quarter, they're pausing those purchases because it basically means they would generate zero cash. So the stories changed with big tech a little bit, where it was incredibly pristine balance sheets, mountains of cash. The mountains of cash is still there, but it's now being offset by a larger mountain of debt. That's not always, that obviously is fine when Google Cloud is growing. It is. Just understand the risk that some investors see with that. And then obviously your free cash flow has diminished and the stock repurchases have gone away. Dividend payments obviously still remains. We'll move over to Microsoft. What's going on with Microsoft in the after hours? Remember that Microsoft reports their earnings, and I'm seeing the shares are down by 2%. Let's check on some of other software because that'll be kind of interesting. Salesforce is down 1%. ServiceNow is down 1.5%. Okay. What's Adobe doing? Adobe had a nice little announcement with Anthropic, and you're not doing anything. So let's go back to Microsoft. We're seeing in the after hours, shares of Microsoft down about 2% on a day where it was a red day for them. On a flat market day, we'll refresh the screen. We'll see Satya, this beautiful bald head. The problem with Microsoft is they put their stupid earnings in, you have to go to Microsoft Word sometimes to get this formatted right. We'll make do with what we got. First world problems when you're dealing with this. Now, Microsoft will flow down to the financials. Let's get to them. This company, well, let's look at the growth rate. This is the first chart I always look at with Microsoft. I'll try to zoom it in so you guys can see it maybe a little bit better. But what I like to see is your Azure growth. That was 40% year over year. That's pretty good growth. Well, the other thing I look at, oddly enough, is LinkedIn, because it's like if LinkedIn's growing, then my God, the rest of these businesses probably are doing pretty good too. I mean, who goes to LinkedIn anymore? 12% growth over there. The other thing I look at is search and advertising revenue as well. That grew 12%. And so these are like I don't want to say sleepy dinosaur type businesses, but those are doing very, very well. What I also look at is Microsoft commercial cloud revenue. This kind of gives you a little bit of an indication on computer sales, actually this Windows OEM and device sales. This gives you kind of a window on device sales and a little bit of weakness there. Let's see if Apple's having any read through on these. Apple's basically flat. Apple reports their earnings tomorrow. Sometimes you can kind of read through the two companies, but right now we'll focus on Microsoft. Let's flow down to the numbers. Microsoft reported in the most recent quarter $82.9 billion. The expectations for Microsoft was actually, I don't know if I have Microsoft's. Sorry, this is Microsoft. Microsoft's expectations was for 81.4. The high end was for 82.4. And Microsoft Microsoft hit the high end, 82.9. So now it's going to come down to guidance on the call because the expectations is for $87 billion. And so my guess is Wall Street's just going to hover it here and then wait to see on the call. The rest of the business, as you can imagine, is absolutely amazing. When you have that type of growth rate over at cloud, and then obviously their software business, it remains to be very, very, very high margin. Your gross profit is $56 billion. You have some R&D expenses, which are up year over year. Your sales and marketing up as well. Companies obviously continue to drop headcount. So you're continuing to see that over and over again. But your operating income, $32 billion up to $38 billion. I'll remind you, this is for 3 months. A lot of these other companies we look at and we're nitpicking them. This is extraordinary. When you look at the balance sheet, this balance sheet has never been like that pristine. They often do those big acquisitions as well. They've obviously done LinkedIn in the past, but they've done Activision Blizzard more recently. They have $32 billion in cash. Count the other short-term investments. They got $78 billion. Last year, they had 94. So, a little bit of draining of cash there, as you can expect. Your property, plant, and equipment, your CapEx, your data center, $200 billion up to $283. You come down to the long-term debt, it's actually lower from 40 up down to 41. But sometimes some of it comes up here to short. Oh yeah, your current debt. So when you see long-term debt tick down from 40 to 31, you want to come up here to current portion of long-term debt. Sometimes it's just gone current, and that's what appears to happen. You had $3 billion last year. Now you got 8.8. So this is something to keep in mind. I mean, first world problems for Microsoft for sure. Now the all-important cash flow statement, because this is where the rubber meets the road with these companies. $31 billion of net income. You have a high depreciation number, obviously, with data centers and all these types of things. And you get to a net cash provided by your operating activities at $46 billion. Last year was $37 billion. The CapEx number is down here at $30 billion. My gosh, that's a huge number. So to give you some comparison, Meta spent in the quarter, we'll call that $19 billion, $19 billion on CapEx. Google spent $35 billion in a quarter on CapEx. Microsoft spent, we'll call that $31 billion. Last year, it was $16 billion. So when you're looking at the semi sector and memory and semi-cap equipment and, anything that like touches a semiconductor has gone up in value. Now you see why. The world's richest companies are pumping not all of their cash flow, but all but the scraps. So the company generated $46 billion. This looks very similar to Google, where they spent all, but they had an investment that they made. Looked like they made an acquisition. And that was about it. Did they not buy back the stock? Sorry, I'm seeing here. So common stock repurchased 4.7. So Microsoft continuing the buyback, obviously continuing the dividend as well. So they're continuing that discipline. but it actually increased the cash, probably because they took on some debt. So all in all, companies are managing this. There's just going to be a certain segment of investors that aren't super excited about it. Now, Amazon, seen in the after hours. Amazon was up by 1.3% in the after hours, down by 1.3%. But Amazon was in the most unique position, technically, in the most, I would say, other than Google, probably the most privileged position technically. In fact, this chart looks even better than Google because you've just made a series of higher highs. The higher lows are very well confirmed with this one. You've broken to an all-time high. You're not retesting an all-time high. You've broken out to it. Technically, Amazon looked beautiful. And no matter what happened in the after hours, I'm not saying it didn't matter, but it's not as big of a deal. We'll get to Amazon. I'm trying to find guidance for the upcoming quarter. I know they always give it. We'll get to that here in a second to see if I can find it. The problem with Amazon is they go on for like 5 years about what they do. Here we go. Second quarter guidance for Amazon. I have trouble reading these numbers with a straight face. Amazon's expecting in the upcoming quarter, the second quarter, $194 billion to $199 billion worth of revenue. Is this Amazon? This is Amazon. Whoa. Holy cow. Wall Street was expecting 188. And Amazon just said they're doing 194 to 199. The high-end estimate was 198. So Amazon's coming way over and above. The expectation was for 12.6% growth. The company's saying they're going to grow between 16 and 19%. Now, why isn't the stock up higher? Well, I mean, it's been on a tear. And we'll get into the details here. All of that money is going to be burned through. Operating income between $20 and $24 billion compared to last year, which is, almost non-comparable. It assumes Prime Day in the second quarter, so that's the upcoming quarter. That could accelerate maybe some of the revenue, and maybe some analysts didn't necessarily have that. And we'll get into it. Amazon always leads with a cash flow, and honestly, I'll get back to that. I want to get to the net product sales, and then we'll go to cash flow. So you had in the most recent quarter $181.5 billion worth of revenue. Wow. The expectations for Amazon was for 177. So Amazon just knocked it out of the park in the quarter from a revenue perspective and a guidance perspective. Now, as I can imagine, here comes your cost of sales up, fulfillment up, technology and development up, sales and marketing up, G&A down. I mean, Andy Jassy, if he was in the room, I'd probably kiss him on the cheek for that. It's fantastic. It's amazing. Total operating expenses from 137 up to 157. So you bolted on, what is that? $26 billion in revenue, but you bolted on $20 billion of cost. So your operating income went from 18.4 up to $20.9 billion. You flow down to a net income. They also have this ballooning other income, which I can imagine is likely investments in Anthropic, which probably on paper has skyrocketed over the last year or the last week, probably, let alone the last year. And so you have a good net income, not good. I mean, this is amazing. 17 billion up to $30 billion. Let's move over to the cash flow statement for Amazon, because this is where it gets exciting. And this is where you see the aggression. This is where I actually think you see the differences in the company's business model. We talked about with Meta. What are they spending all their CapEx on? Meta's spending all their CapEx to serve memes and silly ads, and not silly ads. What happens on Meta and Instagram is not silly. It's a lot of people's entertainment. A lot of people, if you look at their screen time on their phone, they're spending more time on Meta platforms than they do with their own children, than they do talking to their friends. If you look at how much time you spend on Meta, Instagram, or any of these things, and you add up the hours you spent there versus the hours you spent with your own children, a lot of people probably spend more time on Meta. So it's not stupid. And what they're spending on is important to a lot of people. It is a huge part of their daily life. But Meta is different. They're spending all their CapEx on their own stuff. They're making a major bet. They're making a bet that Snapchat is going to have to large language model somebody else's large language model. They're going to have to rent data capacity from somebody else. They're betting, in my opinion, what Meta is betting on in 5 years, we're not logging. I mean, like, look, 10 years ago, you logged on to Meta, and what'd you get? Your mom's post, your friend's post, your high school roommate, your college roommate's post. That's what you saw on Meta. Then obviously that has evolved. We're on these platforms, and now we see posts from people that we've never met. It's like half your feed might be, Andrew Tate nonsense or this Clav guy. You get fed all this nonsense. Well, what is Meta betting on? Meta's betting that in 5 years, you're not just getting nonsense from, silly accounts. AI is going to feed you the nonsense, and people are going to gobble it up. And that's what Meta is betting on. And they're betting their competitors like TikTok, Snapchat, and these other companies, they're not going to make that investment. Or if they do, they're going to have to do it at a much higher cost. Whereas Meta is going to own the whole stack, the large language model, the platform, the ad network. They're going to own the whole thing. And that's what Meta is betting on. It's a huge bet. Somewhat risky, but risky with an out that they could always do at X. I don't know if you guys saw this, like X or Twitter or whatever. They're leasing capacity to Cursor because what they figured is, well, our large language model is not the frontier. People on the X platform are not they're using Grok a lot, but it's not to excess capacity like you're seeing it at these other large language model. So they have some extra capacity. They lease it out to Cursor. Meta could always do that. Right now, they're deciding not to do that. Google is doing a lot of their CapEx, obviously, for some stuff internally. Some of it, a good amount of it, is for Google Search and their workplace and their Gmail and all these types of things. They've got a lot of internal stuff. But Google is turning around, as we saw with Google Cloud, and is minting money. The many of these GPUs or TPUs over at Google get turned on, and they are just printing money. It's a great business. Microsoft, the same thing. They are using some of this internally, but a lot of it goes out to their enterprise clients. Now, the one company that is a little bit different than all of these is Amazon. And you're going to see it right here as we go through the cash flows. So you pull down your net income, $90 billion. It's hard to say that with a straight face. I mean, $90 billion of net income in a quarter. Sorry, that's for 12 months. Sorry. All these, I wish they would just standardize these things. Left columns, the current column, right columns, the prior column, but you have to kind of double check these things. 2026, you edit that. Like if I was doing this on a video, I'd just edit that out. $30.3 billion of net income, full year, $90 billion. Look at this. This is very, very aggressive. $26 billion of operating cash flow for Amazon during 3 months. Sounds great because it's, about $9 billion higher than the $17 billion they built in last year, operating cash flow. But look at this. Purchases of property, plant, and equipment, $25 billion last year, $44 billion for Amazon. They had only $26 billion of operating cash flow. They spent $44 billion of it. So yeah, you're going to have to pull money out of your bank account. You're having to, finance this. This is negative free cash flow. Now, the good news with Amazon is they're turning around. The minute these data centers get turned on, they generate revenue. And think of it like an apartment, right? If you're watching this and you stand up an apartment, and maybe it's like 10 units or whatever, you'd have to spend, out here in California, you'd have to spend a ridiculous amount of money. But let's just say you had to spend $1 million to stand up an apartment complex. Well, your tenants, if you only got 10 of them, are only going to be paying you $1,000 or $2,000 a month. So your $1 million is sunk, but now what do you get? You get the cash flow from those tenants month after month after month. And over time, obviously, you start to pay off your investment in your apartment complex, and you obviously have maintenance and all those types of things. Eventually, you generate positive cash flow. These GPUs in these data centers are almost the identical business model of building apartments, building something to rent. They cash flow over a longer period of time. You have to sink the cost in, and then you get it out later. and this is just massive. Look for the full year, or it's a 12-month period. 148, they spent 151. I mean, holy cow. This is as aggressive as you possibly can get. How'd they finance it? $53 billion of debt in the most recent quarter. Whew. As you can imagine, that is going to turn your balance sheet upside down just a little bit. But before we get to that, let's look at this. I love to look at the segment information over at Amazon because it tells you some very interesting things. Everybody talks about AWS, and we'll show that number to you in a second. It's obviously pretty explosive. $93 billion of e-commerce sales, essentially. $104 billion this year. Look at your operating income from 5.8 up to $8.3 billion. What is net income or operating income at AWS? AWS is $14 billion. So everybody, there's this belief, and it was true for a long period of time. Company only makes money on AWS. AWS is the only thing that's worth money over at this company. Not really. Honestly, give this company another few years, and the e-commerce business combined in North America and international. I'm assuming this includes like Amazon Prime and some other stuff in it, the ad business, these types of things. But it all is kind of circular. If you don't have the dominant e-commerce platform, people don't sign up for Prime. Advertisers don't advertise on the platform, all those types of things. Well, look at this. Combined, $8.3 billion net income or operating income in North America, 1.4 internationally. Combined, that's $9.6 billion. That's not much lower than what AWS printed at $14 billion. The AWS sales number went from 30 billion up to $37 billion. You flow down to a balance sheet, and as you can imagine, this thing got blown up a little bit. There's some cash on the balance sheet, some cash. It's like $140 billion. But where's the long-term debt? Oh my goodness, $65 billion last year. No, not even last year. They had $65 billion of long-term debt in December. Now it's $119 billion. Now it's balanced off by more than that in cash. But when you are free cash flow negative, when you have spent $64 billion, you spent $44 billion in CapEx and you only generate $26 billion operating your businesses, this is going to make some investors, mildly nervous. This is the other thing I look at. Let's see, all the way down here. For AWS, you got to zoom this in. I don't know if you guys can see this. I'll describe it the best I can. Oh my goodness. Look at AWS, guys. The AWS revenue growth, if you were good at math, you could have calculated this already. 28% growth. So you have a reacceleration here. So why is Amazon spending so much on CapEx? Why are they willing to go borrow $53 billion? Why are they willing to do that? Smart investors like I'm seeing, across YouTube and X right now, we've got about 1,000 people watching. Smart investors like yourself recognize, hey, look, if you're building apartments and people are snapping up the units and instantly renting them out at market rates and signing 3-year contracts, and the tenants in there are good and they're making a lot of money, well, you'd want to build as many freaking of those apartment complexes as you can. And that's where Amazon is. That's what they're seeing. They had 19% growth, 17, 20, 24% growth. It reaccelerated to 28% growth. That's insane. That's insane growth. Across the board, you're seeing an acceleration of growth. Online stores kind of reaccelerated into 9%. Your physical stores actually decelerated to 4%. We'll see what their strategy is there. Maybe on the conference call, they'll have something there. Third-party sellers, there were some boycotts in the most recent quarter, but doesn't seem to impact that. In fact, the 12% growth for third-party sellers, this is probably why they're raising fees. That actually accelerated to 12%. That's the highest growth rate that you've seen in the last 5 quarters. Advertising services staying steady at 22%. That's why I look at the Microsoft number too. So it's like Microsoft ad business is like Bing, and like Yahoo or something. Well, they're growing at 12%. If a dog crap ad service can grow at 12%, well, a good one should grow a lot bigger than that. And it grew 22%. And obviously Meta and Alphabet growing at a larger base at a similar type of growth rate. Subscription services, this is your Prime up 12%. You'd like to see that accelerate with Prime Day coming up. They have this other category as well. I'm seeing that accelerated to 25%. They tend to lump new stuff into other. And so other includes sales to shipping services, healthcare services. Could be they bought One Medical and they've been kind of like pumping that. And they have the pharmacy in there as well. Certain licensing and distribution of video content and co-branded credit card agreements. So that grew 25%. That's a massive growth rate. So they either licensed out maybe some new content or they have some type of growth there. But the key number is the 28% growth. So what they're seeing is the minute they stand up the data centers, they get rented out. They're getting rented out by customers like Anthropic and others that are making lots of money. And they are coming in and renewing the contracts. Now, to run down the after hours action, Amazon is now down 1.8%, 175%, after being up about the same during the after hours. Technically, it actually didn't matter which direction Amazon went. If Amazon sold off, it created a wonderful buying opportunity, especially if you got deep back to the 200-day moving average, back under, call it 230. Amazing if it did that. If it broke higher, I don't know. You certainly could have profit took there. That would have been somewhat unusually technically. But technically, that one looks sensational. Wow, Google, Sundar Pichai, who have also said should get fired, but clearly didn't. I have a really high hit rate on CEOs getting fired, including Tim Cook and 2 Intel CEOs and a Nike CEO and the Boeing CEO, among others. Sundar Pichai and Mark Zuckerberg, not my finest moments, calling for CEOs to get fired. Sundar Pichai must be singing love songs. They must be having, love tunes playing on the conference call. That thing's up 5.5%. Meta moving in the other direction, down 5.5%. And Mark Zuckerberg's not great on the conference call. I will say Mark Zuckerberg's not comforting on the conference call, but in my opinion, this is what you want with Meta. You actually want the reversal here. In my opinion, a lot of people will say, well, Meta's trading at, we'll call it 20 times forward and Google's trading at 29 forward. Well, yeah, the reason why is because Google has this Google Cloud business, which is more or less doubling its revenue. They have their custom silicon business as well, which has turned into a big business. They don't break it out. I wonder, maybe somebody knows in the chat, the TPU sales, does it go in? Is that Google Cloud? Is that Google services? I don't know what that gets put into. It's probably not other bets because it'd be a bigger number. But at the end of the day, you're monetizing that CapEx. Meta is not monetizing their CapEx. And so they're punished by it in the after hours. Now, it's an aggressive bet, which I really appreciate and I respect. But just like Reality Labs was an aggressive bet, it comes with its own risk from a shareholder perspective. Microsoft's hovering at 2% down, but again, you have to wait till about 3 p.m. when the company reports their earnings. Let's move over to the chat, see what you guys are doing. See, let's look at the poll. It looks like tomorrow people are buying Microsoft by a big number. Yeah, we'll see what happens with Microsoft on that guidance. 3 p.m. is a big moment for them. We'll see what they say. And they give you it all by segment too. Obviously, Azure growth and those types of things are going to be a very, very big deal. What about Google and the TPU? Yeah, I was just kind of talking about that. I'm not exactly sure. Maybe they'll say it on the conference call, maybe in a 10Q. You can dig that out. But my guess is that's still the actual physical sales of those. My guess is that is just going to be counted as cloud revenue, because I would assume that Google is still having some control over that cloud environment in that data center. So they're obviously renting TPUs as we speak, and they've been doing it for years, but it's obviously a business that has really taken off for the company. But I think what it points to is your profit growth over at the company. So your revenue, like, not almost doubled, but it's up a lot from 12 to 20. So but your profit, your operating profit tripled. So it's showing you're having obviously margin expansion and operating profit expansion there. So again, a lot of that has to do with the TPU. In my opinion, I think I said this on a conference call, of the companies that if you were to like paint an ideal picture of AI, Google, in my opinion, is in the driver's seat because they have everything you want. They have distribution. They have distribution, obviously, through YouTube, where a lot of people are watching this. They have distribution on search. They have distribution on Android. They have distribution through Gmail. So they can get in front of your face whenever they feel like it. Okay. Not every company obviously has that. Okay. They own the frontier large language model as well. They own Gemini, but they have big investments as well into Anthropic. They also own the custom silicon. They have a great relationship with NVIDIA and other companies as well, but they own a big chunk of the custom silicon. They've been working on that a long time. That is a bet that is paying off. And so this is a company that has it all. On top of that, they have a way to monetize it all. Online ads obviously have been around for a long time. AI ads have been around not very long at all, but these are something that's going to continue to evolve. And we'd expect both Meta and Google to be in a pristine opportunity there. The second company in almost an equally good position is Amazon, because they have all of the same ingredients as well. They have distribution, somewhat different distribution. You can count the Amazon platform, Amazon.com, but that's kind of a small piece. I look at just AWS as a distribution platform, in that it's the largest cloud. It's something that developers have been using a long time. And if you need capacity, it often is available, particularly at kind of the general compute side. And they have some of the lowest pricing and some of the deepest developer tools inside of what they got. They've got massive They don't have their own frontier model, but they have massive investment in the two companies that are not Google that have one. And so they have a huge relationship there. They're going to be able to serve those models on their platform. Amazon also has custom silicon. They have a great advantage when it comes to general compute or CPUs, the stuff that competes with Intel and AMD. But they also have obviously Trainium and the Graviton, I think is the other one that they call it. Those are good. And in an environment where demand is off the charts, good is good enough. Good is great a lot of times. And so they have some cost advantages there. Then you probably move to Microsoft, because they have a similar type of thing. They have a lot of distribution. They have, great clients. They have some of the most of the world's richest companies that are already customers. And so they have a great distribution platform through Windows and PCs and all these types of things. The wild card, obviously, is Meta. Meta has elite tier distribution. They are just now working on their own custom silicon. They don't have it really necessarily at scale, and certainly compared to Google and Amazon, they're not even close. Same thing with Microsoft. They're lacking that custom silicon piece. And so that's not a box that they can check. They're working on it and they have some of it, but it's not even close to being at scale, certainly compared again to Google and Amazon. Now, Meta doesn't have a way to monetize this right away other than through their core business. And an argument could be made with Meta in that, yes, they're going to be able to monetize AI. They're going to be able to serve people AI slop on Instagram and WhatsApp and all these places, and people are going to dig it up and it'll be great. But will that just simply replace the ads that already get shown there? What additional revenue are they going to be able to bring in? Unlike Amazon, which we saw when we looked through Amazon's financials, what additional revenue are they bringing in because of AI? Well, look at AWS. You've reaccelerated to a 28%. I've covered the company for a long time, but my memory is not great. I don't remember a 28% growth rate in a long time. Maybe during COVID, you had some moments like it, but this is extraordinary. So with Google in the TPU, to get back to the question, it just puts Google in a wonderful position from that perspective, that they're able to control their own destiny, at least from a silicon perspective. And that is a great, great, great place to be. My goodness, the shares are now up 6.5%. This chart now is the most beautiful in all of Mag 7, followed closely behind by Amazon. But this is just a beautiful chart, obviously. I'm sure most of you own the stock and you're excited. What am I doing with my Intel shares? I am up a large amount on Intel. I kind of want to sell them and buy something stupid, but right now, the thing is with Intel is I was looking at it the other night. I was like, I think there's a path to $100. And now that was like at 80 something bucks. Now we're at 95. I don't know. In these situations, I just moved the stop loss higher. There's a big ass gap in the chart. I mean, the gap in the chart would take you just comfortably back down to 770. Here's the thing is the company is worth $476 billion. They're not profitable. There's still a long ways to go. But if they nail foundry, and I have a lot of confidence that they might be able to. Here's the two things you have to believe in with Intel if you're going to keep holding shares like I am. And I haven't even thought about selling the ones that I have. And it's a 6-figure unrealized gain at this point. Here's what I'm thinking about with Intel is they have to nail foundry. They have to continue to make progress inside of the data center. But they have the ability, in my opinion, they have the ability to do that. The most important thing you have to think about with Intel is how long is this semiconductor cycle going to expand? And what I mean by that is semiconductors go in cycles. There's obviously huge demand during COVID. And we're looking at a chart of NXP Semiconductor because actually NXP Semiconductor gives you a nice view of cycles in semiconductors. People demand semiconductors and then the demand goes away. The demand comes back and then it goes away. Then the demand comes back and it goes away. And you just move through these waves. And really the way you have to think about it, I think right now is how long is this wave going to last? This wave is different. This wave in semiconductors is different. Why is it different? Because it's not you and me buying cell phones. It's not you and me buying electric vehicles or luxury vehicles where NXP's semiconductors go into. You know who's buying these semiconductors? Are companies like Amazon. Amazon can borrow $55 billion in a quarter and go cash flow negative for a while if it wants to. If it grows AWS at 28%, banks will line up for this company and continue to give it money. It's Microsoft spending, all but $10 billion of their free cash flow on this. It's Google spending all but $10 billion of their free cash flow on this. And it's Meta spending all but $10 billion of their free cash flow on this stuff. It's not, this time in semiconductors is different. It's not you and me having to buy a personal computer, having to buy an iPhone, having to buy a new car, a new electric vehicle, or a car with 18 screens in it or whatever. It's different this time. So I actually think this semiconductor cycle could prolong a lot more. The reason why I brought NXP is one, it represents some wave of the semiconductor cycle, but what we are seeing is a different part is now taking off. Analog, which is not all NXP, but a better example is Texas Instruments. Texas Instruments shares have gone parabolic more recently as well. They've beat and raised significantly the last 2 quarters. And this is highly unusual. Clearly, this is just a couple of candles over a few weeks. We'll change it to green because it's actually up. Highly unusual. I mean, look at the history of Texas Instruments. You rarely see these types of candles. Where'd you see them? Back during .com. And I actually think this, now, it is probably going to end in a similar fashion where these things have pretty dramatic reversals. But in my opinion, the semiconductor cycle this time around can last a little bit longer because the companies that are financing it have the cash and they have the ability to go get even more cash if they need it. And they have the ability to sustain this for several years if they need to. And so that could create a cycle where you keep Intel shares. To go back to the question, why don't I just snap off my Intel shares, and then have a big bill that I got to pay the California government and, the federal government next year? That could be one reason why. I'm not really thinking about it that way. But what I'm thinking about is how much higher could the semiconductor cycle go? And with Intel, my gosh, if the semiconductor cycle lasts into 2030, which is just another 2.5 years or so, this could be $1 trillion stock. So maybe I'm being greedy, but I will have stop losses along the way here. I don't think it needs to be super high right now. I think you could let the air out of this one a little bit and it's still not that big of a deal. I mean, you are on like right now, you are on that trend right now. And so even if you pulled back to like 65, you're still holding the trend. And so I'm just going to let that one roll. The other one is, Micron, similar type of thing where it rallied, pulled back, rallied. I mean, I don't know. The trend looks really good to me. Yeah, Amazon has not outperformed the S&P in years. Yeah. And in my opinion, that's what I think really good investors will look for is these stocks that are set up to price it in really quickly. That's what happens a lot of times with FANG. I think the best example of it actually is Tesla. If you pull up a long-term chart of Tesla, change this to a monthly view. Look at Tesla. Now look at the chart of Tesla. I mean, it goes up, it drifts up for a while. It goes up, and it's probably good performance. I don't know if it beats the S&P 500 or not. But what happens with companies like this is Wall Street. This is on a monthly chart. Tesla went from $275 to $11 in like 4 months. Okay, did that one time. Maybe that was Model Y, Model whatever. I don't know. Then look at this time. It went from 17 to 300 in a equal, like a very quick period of time. So we're talking over maybe a year's time. That's what happens with these well-known stocks is they can price in the future very, very quickly. So if you're like, oh, I'm not going to buy Amazon, I'm not worried about Amazon, it hasn't been performing. Well, all of a sudden you're going to miss the rally. Very similar to where the stock was, very quickly went from 87 to 190 over the course of a year. Now it'll go sideways for a while. It's a very well-known stock. I mean, look at NVIDIA. NVIDIA does the same thing. The entire history of the company, or more recent history of the company prices in the next year in a matter of months, and then it goes sideways. Prices in the next move, goes sideways. And so that is what's happening in these markets where you have some uncertainty. Not everybody's sure about where the CapEx is going. Not everybody's sure is how they're going to monetize it. So there's going to be some hesitation, and then boom, you're going to have a snap of the fingers, and then the next couple of months are going to get priced in. In my opinion, that's what we're about to get with NVIDIA. You have one last moment to get into NVIDIA before you have the 2027 priced in, because 27 is not priced into shares of NVIDIA because they're trading at whatever. They're trading at, 25 times forward. When some of these other companies that we looked at, even Texas Instruments, still trading at 33 times forward, but the forward revenue estimates are going to skyrocket on the company. And so when I see these CapEx numbers on these companies, it's going to flow down there for sure. People are still going to buy the dip. It looks like Amazon and Microsoft tomorrow. Nobody buying Google. That's probably a good thing. Tim Cook wasn't fired. I mean, I think that's kind of a way to look at it, but Tim Cook, there were rumors that he might be replaced, and he said, no, I want to stay there for years. Just understand, like CEO, it's rare for a CEO to get fired, especially the companies I cover. Like it's extremely rare. Like it's not like athletes or like coaches in the NFL where they're constantly fired. For a CEO to just leave is extremely rare. And so for Tim Cook to actually, he's indicated that he didn't actually want to leave. He indicated that he wanted to stay there. Understand that Apple can't fire him. Okay. Apple can't come out with a press release and say he's fired, just like the Adobe guy. I'm sure you're probably going to say, well, the Adobe guy didn't get fired. He just left. No, he got fired, buddy. He got fired. So just understand, these companies, when an executive leaves, they're not just going to tell you what happened. I know people that work at Apple. I've talked to people at Apple. Okay. They hate Tim Cook. Tim Cook is hated inside of the oval circle over at Apple. Nobody likes him. Okay. He was not a well-liked executive there. Now, from a shareholder perspective, he did an amazing job. And I have the utmost respect for Tim Cook. But he got fired. Okay. He got asked to leave. And with somebody that has driven so much performance and done an amazing job for the company over the entire history of his life, you don't kick his ass out the door. You gracefully let him step aside. And that is what's happening. He got fired. Tim Cook got fired. Apple's not going to tell you that. CNBC is not going to tell you that. No little financial influencer on YouTube that's still trying to figure out how to read financial reports are going to tell you that. But if you read between the lines and you talk to people that work at Apple, they'll tell you Tim Cook got fired. He got fired. Yes, he did. Now, again, the press release is not going to say that. The company is not going to say that. Nobody in financial media is going to say that. But that is what happened. When you're in Tim Cook's position, you don't let go of that job all of a sudden like he did. Now, I know he's got a couple of months left, but they needed to bring in someone new there. And they did that. And you see performance of Intel stock. I guarantee you bring in somebody at Adobe with a brain cell, and the stock's going to be able to turn around. Okay. This stock will be able to turn around. Microsoft. What happened to Microsoft when they had a guy running the company that had like 8 brain cells? It didn't go anywhere. Microsoft stock didn't go anywhere for a decade when, what was it, Steve Ballmer or whatever the hell the guy's name is? I mean, the guy's an idiot. Then you bring Satya Nadella in and the stock, 9X's. Okay. Leadership matters, but just understand at the highest level, this is not NFL coaches. This is not NFL quarterbacks. This is not even your small business or your job or whatever, or your manager or whatever. CEOs don't get fired. Okay. It's extremely rare. You're talking like a couple every year, maybe get fired. Okay. But they always announce it in their own way. It's, oh, he's stepping aside for personal reasons. Oh, he's pursuing other opportunities. Oh, he's doing this. They always try to make it, again, like, don't read the press release. It's like almost like a politician being like, I'm going to cut taxes and I'm going to make your life better. If you believe that's what the politician is saying to you, like, holy crap. If you believe that Apple didn't fire Tim Cook, then you probably should have your money in ETFs and mutual funds, because that is, in my opinion, that is the type of analysis that is required here. That you have to recognize that a leadership change was needed there. They were not going to fire Tim Cook. They did that with Steve Jobs. They saw what happened. Apple saw how that was a bad idea, that you can't actually do that, that is a bad idea. And so you do it as gracefully as possible. Okay. But he got fired. If you're the CEO of Apple and then all of a sudden you are not the CEO anymore, you got fired. Why do you think Microsoft is down? I would say Microsoft, you just need to wait till 3:00. Wait till 3:00 and see what happens with the guidance. The guidance could pop this one, to freaking all-time highs if it's good. But that's what I would think with Microsoft. You just got to wait till the guidance. The numbers were good, but again, software too is a shaky space right now. Everybody's nervous about software, obviously. And Microsoft, again, not as insulated as both Amazon and Google is with custom silicon and some of the other advantages that they have. Also owning frontier model like Google does. Buying Met at 600. I love it. KLAC, if it drops below 1575. Am I going to recommend Qualcomm? We'll see what happens with Qualcomm when they report their earnings. Wow. Qualcomm did report their earnings tomorrow, it looks like. It's up 9% in the after hours. So I don't know. Something's going on with Qualcomm. Maybe it's ran a little bit here. I think there'll be other opportunities in Qualcomm. I think Qualcomm's, it's going to be in that semiconductor wave, in that semiconductor cycle. Can't wait to cash out. Not by dip into the margin. Yeah, I don't dip into the margin very often. Do you think there'll be a correction with oil prices keep going up? I think if oil keeps going up, then for lack of a better term, the broke people are going to keep being broke, and wealthy people will still do okay. I think it'll have an impact on certain portions of the market, but in some ways, those portions of the market were already getting killed. Like if you look at, Chipotle's up 5 in the after hours. I'll have to check those earnings as well. Chipotle's gotten killed. Why? Because 25-year-olds now spending $7 in gas. So it's hard to do that. It's hard to buy gas. McDonald's actually hasn't been doing well either. And even like Nike's a great example. Why has Nike been getting killed? Not necessarily because of oil, but because that consumer is already stretched. And so in some ways, oil going up just puts further stress on a consumer that was already kind of stressed. Grandma and grandpa have got, $9 trillion in equity in their 5 homes. And, they've got stock accounts and, all that different type of stuff. So the wealthy are doing okay. So I don't necessarily think that it'll be a big deal in the shorter term. Can you share your opinion about Nike? Yeah, I still own a Nike shares. Nike shares are in an account where I don't even know what the password is. So, Nike's going through a phase right now. They need to do some things from a product perspective, but it's really a marketing standpoint. It's really an entire industry standpoint. You got this K-shaped economy where the luxury is doing well. First class airfare is doing good. Third homes are doing good. Cruises, they're doing good. And then Costco's doing great. A Walmart's crushing it. The stuff in the middle is getting destroyed. Nike is in the middle. So they need to drift to in my opinion, continue to drift to the higher price point. Sneaker culture also impacted as well. Those kids were spending all of their disposable income on these sneakers. And now they have far less disposable income. And so it is down. I've seen Nike go through these periods in the past. Is Nike still going to be here 25 years from now? I think so. And so it's in a portfolio that I don't even think I can withdraw from it for 20 years. So if I still have that belief in the stock, then I still own it in that portfolio. Have I touched Nike in a short-term portfolio or a trading stock? Absolutely not. I mean, that chart's ugly. So I don't even think about it. Yeah. Meta earnings were good. The challenge with Meta is they're spending almost all of their free cash flow. In my opinion, the guidance was light for Meta. They gave second quarter guidance of 58 to 61. In my opinion, that was technically it's over expectations, but it's not as good as Google's was. Google's guidance was a lot better. And so I can see a little bit why Meta's down in the after hours, now down at closer to 7%. But Mark's going to get on the call and do what he does. And Mark's not great on the call. Honestly, Mark's not always the base. Rank TSMC, ASML, NVIDIA, Avgo 1 through 4 at today's prices. I would say at today's prices, NVIDIA for sure, number 1, because you are poised for a breakout. You break to all-time highs. This one could run very, very well. Broadcom, kind of similar. It's a little bit different chart. But for Broadcom to continue on this channel, it actually doesn't even need to break out. It could comfortably get to 512. I think it's a $700 price start. I think this could be a $3 trillion company by the end of, or the mid cycle, if you will. So there's plenty of upside there. ASML, I love the company, but it can't get over 1500. So, but I love it below 1200 for sure. TSMC, I don't know. You can just buy this whenever. Honestly, like you can just buy this stock whenever. Obviously, your risk is it becomes the Chinese semiconductor company. And then in that case, you're probably going to want shares of Intel because all of a sudden this becomes the most important semiconductor company in the Western world. Pershing IPO, I don't know. I like Bill Ackman. I think it's the guy behind that. But I don't buy IPOs. When am I going to decide to retire? I wouldn't say like I'm definitely not wealthy it depends on the stand. Like I'm probably considered wealthy from a California perspective, but I'm in California and I see people that like have $20 million mansions in Pebble Beach, and I'm not even I can't even buy the shack next door to the place. I live a very blessed lifestyle, but I live in a very not modest home. Like I keep my expenses relatively low. I value my time with my family. I value my time with my kids. To me, how do I measure my wealth? I can wake up in the morning. I can drop my kids off. If I'm not doing a live stream on a record earnings days, I literally go walk and pick my kids up from school. If they've got if they've got like a band or they got a sports, I can show up. That's how I'm measuring wealth right now. So as long as I'm doing that, I'm happy. My house is paid for, got another one paid for. Things are good. But I still work. I love getting up and work. And healthcare is not cheap out here in California. None of the other stuff is cheap. So I continue to have to work. I don't know. I could take a couple of years off if I felt like it, but I think I would get bored. But retire officially, I don't know. I think there's going to be a second phase to my life. My kids are young. My kids will move on. They'll want to do their own thing and do their thing. That'll be the second period of my life. That's when I'll make decisions on what do I want to do. Now that my kids don't want to hang out with me anymore, or they got better things to do than hang out with me, what am I going to do? I don't know. Those are the discussions I have to figure out. Nvidia price, I think Nvidia is going higher. Micron, I mean Micron. I was hoping with Micron. Let me go back to like a daily view. My plan with Micron was it was going to chop sideways and it just broke to. Maybe. My thing with Micron is I think it looks like Nvidia's chart over the past 6 months is you start chopping here because there is, bottlenecks, if you will, or constraints on the company's ability to deliver more. And my plan was to buy it on one of these bottom moves. That's my plan with Micron. I think this semi cycle where these companies are spending maybe not in excess of their cash flow, but they're going to spend the majority of their cash flow with these types of numbers and this revenue growth. They're going to do this for at least another 2 years. That pushes you almost into 2030. Not quite, but I think this has a chance to go into 2030. If it goes into 2030, Nvidia stock doubles from here. Broadcom stock doubles from here. Intel has a shot at $1 trillion revenue, or $1 trillion valuation. Oracle, I love Oracle, but man, you've got a headline risk on this one. There's just so much noise and headline risk, but technically it's fine. Like if I were to buy it, I still own Oracle, a good chunk of it in a retirement account. But my cost base is a little bit lower. Like I would buy it you could buy it here, buy it a little bit lower, stop loss it. I wouldn't want to see it get below 130. Definitely wouldn't want to see it get below 116. That's how I would play it. And you have upside that, the cycle continues and it's good. Looks good to me. Visa looked great. We covered that last night on the premium side. Visa, though, is hitting the 200-day moving. Oh, no, wait. Holy cow. It broke out of that. Look at that chart. You created a big gap in the chart with Visa, but this is up now. I think you can buy the dip on this one. It's like, oh, you can buy the dip on Visa. I'm not breaking any news. But the gap fill, now you have gap fill back down to 320. I would like it there. I already own Visa, but if this was the bottom that you made back in, I guess it was maybe April or something, you're probably going to start that uptrend. And so you're going to want to come back, test that level, and then move higher. But chart looks okay, but I like it. I'll wait till 3:00 on Microsoft, see what they say in earnings. Could be best. Kunal, my bud. I don't know if I said that right, but you know who you are. I appreciate you. Contact me anytime. Reduced SMH 25%. I mentioned last year, hold it till March of this year. SMH is the Semiconductor ETF. If you want to just play semis. Yeah. Anybody that takes profits with a chart that looks like that, you're never gonna be disappointed. Ever be disappointed. Because look, if the cycle ends, boop, you're trashing on this stock or this ETF. But yeah, I wouldn't blame anybody when a chart looks like that for sure. Do your thing. Microsoft might recover. Microsoft, it's software. People are so scared of software right now. People are so scared of software. But here's the key levels with Microsoft. It was your lows back here at 360. As long as you don't pierce these lows at 360, you're going to be okay with Microsoft. Now, overhead resistance is now this 200-day moving average. I also have this yellow line on here, which is a longer term trend. When you break out of trend, like Microsoft did, you almost always want to come back test bottom of trend. Same thing happens on the reverse. You'll see it with Visa. And boom, you hit your head on the 200-day. This is a very logical level, in my opinion, for Microsoft to get rejected. Doesn't really matter too much. It's really this level down at 350, 356 or so. Don't really want to come back down here and retest these levels. Wouldn't necessarily be ideal. Wouldn't be the end of the world, but wouldn't be ideal. If the stock got sucked back up into here, that actually would have been the more extraordinary thing. And it still could happen. They report earnings later, so we'll see what happens. ASML, Nvidia, Microsoft, or Micron stock upcoming. Yep, I love it. PayPal CEO looking to sell part of the business. I see what you mean about management. I think I called for the PayPal CEO to get fired, and he did. That was a guy that actually got fired. That was ugly. And so, like, look, when your chart looks like that, you actually do put out the press release and be like, this guy's a moron. We got to get rid of him. But if you were to learn anything from me today, which I hope it's maybe a little something, don't buy charts that look like this. Like, I mean, yeah, you can throw $20 at this chart or whatever, but this chart has looked bad for 4.5 years. There was a moment here where it broke out and back tested. This was like kind of positive, but it ended pretty quick. Just don't buy charts like this. There's no reason to bottom fish. Where do I think the market is heading in the upcoming 15 days? I mean, I have no, I would guess lower. That's SYP. That's synopsis. I would guess lower because you just confirmed a new higher high and you're at the top of the channel. I would just say technically, if somebody was like, Colin, here's a Glock to your dome, make a trade, I would take it to the short side because the path of least resistance is lower. Back to a 200-day would be a good buying opportunity. I love Amazon so much. Qualcomm reported. Okay, that's why. I liked Qualcomm. I was in Qualcomm. Should have stayed in it. There's just mistakes you make as investors. And this one could have gone either way. But it's going to now reach overhead resistance. You have clear overhead resistance on this stock for years now. Right at 175, a little bit higher. But now what does this do? So a lot of you probably find yourself in this position. You were watching Qualcomm or you were in it or you didn't have enough of it and it's breaking out. It's busting up. And it's like, damn it, I missed it. No. What you can now say is this is technically reversing and confirming a lot of things. This is trying to confirm a new higher high. Now, technically, you'd really want to get back up into the 230s, but where it's at in the after hours into the 190s is probably good enough. I mean, it's 180, so it's got a ways to go. But stock's going to meet overhead resistance at these levels. The sellers have stepped in at this level consistently. I mean, literally right where the stock is multiple times over the past couple of years. So what does that tell you? Well, the stock is probably going, ideally it's going to get rejected here. Creates buying opportunities. You also have a gap in the chart down here back to 138. I know it seems like a long ways away, but that's where I'd be targeting this back to a 200-day moving average. 200-day moving average is still negative. That's going to want to pull this one back to that range. So you can, short answer or short summary here is when a stock makes a move like this, it gives you comfort and more confidence to buy the dip. Now, could you have bought it down here at 123? Yeah, you could have bought it at 123, but we just looked at the PayPal chart. It could easily, when the stocks are on their ass, they could easily go lower. This could have easily dumped out the bottom and you just lose it all. Whereas now your probability of success is much higher because the stock is performing well. Obviously, pullbacks, in my opinion, can certainly be bought. Home Depot, Like, look, I love Home Depot. Look at this chart. Just it's chopping sideways. It's the bottom of the range. If I bought Home Depot here and I didn't want to lose money, I'd buy it at 320. I mean, it reports earnings in 20 days. So it's long enough away. But if I was to buy Home Depot, I'd buy it at 320. I'd have my stop loss at, I mean, anywhere between 313 and 308 and 299, 297. Wouldn't want it to get meaningfully below that. And I would look to take profits. We come back up here, retest 200-day moving average, test all-time highs. I mean, you have $80 upside, and you can play this 80 to the upside and like 10 to the downside. So yeah, I like that from a trade perspective. Do I think Microsoft is a buy now? I mean, I have some Microsoft. I like Microsoft. I like software in general. I think it's the problem is like the market doesn't know anything about software. They open their Microsoft Outlook and they don't even understand what's going on there. So there's that risk that you have to wade through that. The key area with Microsoft is I'm not worried about Microsoft until you come back down here and retest 350. Come back down here and retest 350. And what does that tell you? Lower highs still very much intact, lower lows. So you don't know how long that downtrend's intact. But right now, it is actually okay. Meta's tanking. My boy Mark's on the call, probably not singing love songs. It's not his job. I love Mark. And he's being aggressive here. Down 7%. Wouldn't surprise me if you come back down. Now, there should be support for the stock all in this $600 range. So, in my opinion, this creates buying opportunities. You have this uptrend, but you have the 200-day negative, and it's not been. You can see with Meta, it's not been able to get above its 200-day moving average in a while, and that's just how it's going to be. Yeah, PayPal should sell part of his business. PayPal or PayPal should be way more aggressive with what they're doing. I mean, they've had terrible management. How would I handle Poet at this price? Probably. I shouldn't say that on a stream. Let's see. Poet. I mean, Poet's on a 200-day. The problem with Poet now, it's going to have so much baggage. Burned so many people, and there's so many people that are like never going to buy it. But technically, I mean, it looks okay. I mean, I tell you what, if I buy this, the problem with stop losses on these stocks is they just blow right through them. To be clear, I bought Poet at 5 or something like that. And I sold it, I sold it like 10 or 9 or something. So I did okay, but I mean, I would just let it breathe is what I would say with Poet. Just let it breathe. Because like they can turn things around and they're still like, I mean, what's a good AOI is probably a good thing. AOI, everybody was dog crapping on AOI. Everybody thought this company was stupid. Go read Substacks a year or two ago. Everybody was like, no way this company is going to do good. It like 100x'd, like in a really short period of time. And they have crappy management. They've bricked in similar ways as Poet. They've pissed off customers. They've missed shipping windows. It's what happens with early technology. But I would look at these optic stocks, especially the ones kind of early stage pre-shipments. AOI is in a somewhat different category. The other one's a good one is like Credo. Their technology is kind of pre-optic. It kind of takes you into that. Stock did the same thing. The stock would run and then it would crash and then it would rally. So Poet's story is not over. It just now they have to start to prove things, and you're just going to have people that don't like it. VST. VST. What the hell is VST? Vistra. I mean, chart looks okay. You definitely don't want to get below 140 on this one. Get below 140. Let's see if the volume shows a little bit of a good picture here. Yeah. Ooh, yeah. You wouldn't want to get below where it's at. You see, like everybody's accumulated the stock here. And so what happens is when you see everybody accumulate at 140, you start to get below that. It's like, well, who's going to buy it? These dudes were buying it, but are they really going to keep buying the dip? Maybe. You don't really get support until you get back down here into the 70s. Not saying that's going to happen, but technically it's okay. If I bought this one, I would not want to see it get meaningfully below like 135 or so. Just would not want to see that. It's two different stories because the uptrend is intact. So there's that. So I kind of gave you the bad news. The good news is you've kind of more recently confirmed a higher high and you're just consolidating into it. Very similar to Meta, you've not been able to get above the 200-day. You just like hovered on it. So in my opinion, these are like, I don't want to say it's easy, but this is kind of no-brainer trade setup. It's like, okay, here's all the consolidation. The stock has literally spent a day below 150, and it's spent no time below 137. So do I ever want to see the stock get below 137? Hell no, because I don't know what's going to happen if it does that. So that's my downside. My upside is you come back up here and make all-time high at 231. So I have 60 to the upside, 20 to 30 to the downside. It's not the best setup. It's not the biggest risk reward, but it's there. So it's not bad. This channel is about my life story. Yeah, maybe we'll get on this, we'll see what happens. Thoughts on Broadcom? I love Broadcom. I love the CEO. I love how effectively cheap he is. He has a great relationship with Taiwan Semiconductor. People talk about MediaTek and Marvell stealing market share. No, they won't, because they can't get the allocation. This company has committed allocation to Taiwan Semiconductor, and that doesn't go away. They have a software business that prints 95% gross margins. The CEO is like, I would not want to work at Broadcom. I'd rather work for Jack Dorsey because he throws parties and makes it amazing. But yeah, this is beautiful. Huge companies owning huge parts of other huge companies is going to be the biggest tailwind. Yeah. I mean, I think you're right. Some people call it circular financing and they're like worried about it. I'm not. I think it's fine. Is that Intuitive Surgical? It's a good one. I like Intuitive. I've been doing a lot of research on Intuitive Surgical. Now, when I'm doing research, I'm like, hope to God I never have to be under one of those machines. But I literally was watching YouTube videos last night, going to bed, watching surgeons talk about this stuff. I've bought this one recently. It's not, this is not the most beautiful chart. Lower highs, double top, under a 200-day moving average that's down, but you filled a gap. Your post earnings could be worse. The balance sheet is unbelievable. Like you pull up Intuitive Surgical's balance sheet, it's unbelievable. No, I'm probably going to cut things I think honestly, probably a couple minutes from now. Thank you for the TXN call. I got to give props. This is good, research stuff for you guys. Texas Instruments, Texas Instruments, I wasn't paying attention to Texas Instruments, but there was a conference held by Morgan Stanley or one of these things late last year, and all of the analog companies gave a conference. And so there was about 5 conference calls. So it was them, it was Analog Devices, which I can't remember their ticker symbol, NXP, there was a couple other ones. They do this conference. And so I have all these conference calls. And in the past, I would just read them. So what I decided to do, I poured all that information into Claude. And I said, all these analog companies reported or did a conference call that wasn't about earnings. I put it into Claude and I was like, tell me what you see. Are there any similarities to what the companies have been saying? And it said, yeah, we're actually seeing a lot of CEOs indicate that demand is starting to show up. So then I went back and got the last 4 conference calls for all of those companies, put that into Claude, basically put that into a database and allowed Claude to have access to it. And I said, I want you to go back the last year of conference calls for all of these companies and tell me how their voicing has progressed on this. Tell me how their tone has changed on demand over the past 4 quarters. And consistently across the board, all of the companies were saying that demand was, they were getting increasingly more confident every conference call. And then I said, okay, that's all I need to know. I know that the orders are going to start showing up. This was back late last year, November or something, when Texas was a little bit lower in price, $150 or something. And so then my research was okay, at least one of these stocks, turns out all of them, you probably could have just bought all of them. I mean, XP for sure too. I mean, you could have just bought all of these stocks at the time. I landed on Texas Instruments because I thought it was the purest play. They also have control over their own distribution. So I think longer term, they are in the best position to continue to ride this wave. Now you got a big old gap in the chart. It's likely to retest these areas a little bit lower, but that was a good example of like how I'm doing like quote modern research with AI is I'm taking conference calls of adjacent companies. I'm asking the AI to identify patterns. If it identifies something, then I try to confirm it with other data, other information. Then I go in and say, okay, which one's the best position? And then when I researched Texas Instruments, it was like, holy crap, they have all this capacity. They have the ability to demand could go up by like 30% and this company could deliver. Where NXP and some of these other ones, they're actually going to, I don't want to say struggle, but they're going to have a little bit harder time delivering on the promises in future quarters. However, they're going to be able to raise prices. And I mean, the whole thesis is played out pretty well. What do you think would be a good number in today's dollar? Consider yourself retired. I think if you want to consider yourself retired, it's all about your lifestyle. You know, like are you wanting to take really nice vacations? Do you want to drive a nice car? Is your house paid off? What is the property tax on that house, even if it is paid for? Do you have any other revenue streams coming in? Can you do something that's really like passive and stuff? I mean, I have like 3D printers on the other side of this wall, like going off. And it's like makes me tens of dollars, but it's a way to just, it probably pays for like a Tesla or something like that every month. And so like I mean, I would look at it like, what's your monthly burn rate? And obviously add inflation, add, expenses that kind of come out of nowhere and model that out for a little while. I would say retirement comes, I think, in a lot of ways when your monthly burn rate is really predictable. If it's still super variable, then I would put in some work. How can I reduce those variables? Can I pay off my house? Can I reduce some obligation that I might have? If you have kids, what's their situation like? Are they going to be super successful? Are they set up to be successful? Are you going to have them in the house? Are you going to have to financially support them in some ways? Do you want to financially support them? All those things are individual. And it also depends on what state you live in. I live in California. I don't think I'm ever going to like stop trying to make money, because it's like the minute you stop doing that, you have to leave. Like everybody that's leaving California right now, it's people that don't want to work harder. Every year I work harder and harder and harder and harder and try to make more and more money. Sometimes it works. Sometimes it doesn't. But you have to push forward in this state. If I lived in Iowa, I'd be on a freaking ranch, not worried about a damn thing right now. And yeah, it's all about lifestyle. I think if you want, comfortable, then what state you live in, do you have your house paid off? What kind of lifestyle you want. And I just think naturally as we get older too, we've bought all the things that we wanted to buy. We've been the places we want to been to for the most part. So you can dial it back a little bit. Thank you for, yes. Preferred way to DM me. You can hit me on X, or I'll drop my email in the chat. You can always send me an email. I know this is amazing. We'll wrap it up here in a second. Send me an email as well if you need to. Buying the dip on Meta, I probably will. I got you in Visa. That's probably good. Texas Instruments, that's probably good. He's up 12% in Visa and up 18% on Texas Instruments. That's fantastic. Fantastic. Yep, Brad Jacobs is the man. eBay. I like selling on eBay. Intuitive Surgical. I love Intuitive Surgical. I almost bought it. I almost recommended it today, honestly. Eli Lilly. It's not that. It's LLY. Eli Lilly. I like it a little bit lower. But they report earnings tomorrow, so it has a chance to. If it gets rejected, I think there's a shot there. But I like that. Axon, I'm not as familiar with. Axon, I don't know. Yeah, I don't know anything about Axon. That chart though is, it's not good. CEO matters for sure. Leadership matters big time. Google ups. Yeah. I mean, I love Google. I will be listening to the conference call on Microsoft. In fact, it's like 15 minutes from now. DraftKings, $1.99. Look at this. DKNG, $1.99 super chat. Okay. DraftKings stock chart is, I mean, it's a disaster. It's completely rolled over. Where is the volume though? So when I see these charts where there's no, I mean, it's lower high, but it's. I mean, obviously you don't got a lot of price action here. But why didn't my fixed range come on there? Let me see where the volume is. Where did people buy this? Well, it's mixed. I think we can shrink it in. Let's just look at this last move. Yeah, they bought it at a higher price. So technically, this one looks like it wants to drift south of 20. They report earnings in 8 days. My challenge here is it's getting so crowded with those freaking prediction market things. I mean, Robinhood and everybody's got these things in there. Obviously, DraftKings is playing there as well. They have an advantage from a regulatory perspective. I think DraftKings upside is if they make those sites illegal, like if Polymarket has to get a license or whatever, then all of a sudden they become the game in town and then you have a move higher. But you have overhead resistance. This stock chart is making a rounding series of lower highs, lower lows. There's no sign of reversal here. So I would just wait technically. Product wise, I think it's fine. AMD, I mean, just hope the cycle lasts. The semi cycle goes to 2030. AMD will probably double again if that happens. Where do I think NVIDIA will get to? NVIDIA will, I think NVIDIA's got a shot at 10 trillion valuation if the cycle continues into 2030. Reddit, I mean, I don't know about Reddit. I don't know anything about Reddit other than it still shows up on Google search results, which is probably a good thing. Technically, yeah, that's okay. Lower highs, 200 day. I mean, I don't know. Second tier. I just view this as second tier. It's like Pinterest. It's like, what do I think about Pinterest? I don't know. It's a second tier. That's pin. Second tier social media site. So the chart's going to look like this, it's going to go up, going to go down. I just think you have to take profits on these second tier type sites. That's just my opinion. Of Nokia, I was looking at Nokia the other day. They were doing something interesting. I can't remember what it was. Clearly something incredibly interesting because the stock has gone parabolic. I don't know. I really don't know enough about it, but that chart looks amazing. I would be compelled to take profits when the chart looks like that. Pan W, I've been buying Bug. There's just so much headline risk in all of software, cybersecurity that I'm kind of going the ETF route because it's like, this at least mitigates it. It allows me to have some exposure, but mitigate with Bug, which is basically, I think, Palo Alto and CrowdStrike, which is like majority of it. You just don't want to see it get below 23. You don't get below 23, you have upside back to the highs at 35. So you have 4 to the downside, 7 to the upside. It's not great. I'm not going to stream the calls. No, I don't think so. DraftKings, I appreciate it. Steven, thank you. I hope I answered your question with DraftKings. We can come back. I tell you what, I'll do like a deeper dive in DraftKings. I have to look at the financial. I haven't looked at DraftKings in a while. I used to be like a top affiliate over at DraftKings. I had like the #1 site for fantasy college football for a while. And that's like all I did for like 2 years. It was amazing. That's maybe when I retire, I will do that again. Yeah. So SMCI, I hate SMCI. I just can't. Like, I can't invest in criminals. Like, I just can't. In management, I have no faith in management here. Now, the split adjusted, the stock was like at 1,000 or it was 800. And I think I called it, I can't remember what I called it, like $150 trash. It actually came down and almost tested 15. And so, my thesis has rolled out on that one. ISE, I mean, you guys invest in some crazy stuff. Or I don't look at enough stuff. Oh, that chart's ugly. I mean, it's more recently broken out, but I don't buy charts that look like this. This is just that's just asking for it. I buy charts that look more like Amazon and even Meta. Meta looks okay. After hours down 6%. Mark is not doing his thing. Here's my email address if you want to shoot an email to me. I get a ton of spam on it, so don't worry about see what happens. Okay, so poll results. A lot of people are going to be buying the dip in Microsoft. They should be reporting their guidance here in soon, 3 p.m. And Amazon. Wow, people are going to buy Amazon. It's now up fractionally after hours. Andy Jassy does a good job on the call. Nobody's buying Google, at least according to what I can see. Bookings, I don't know. What's the that chart's rolled over. That doesn't look great to me. Hood, I love the product. I love Robinhood's product. But I would agree with what some people were saying online. This company has like led too much into like the crap crypto coins and the sports betting. It's like that's a great way to just drain the wallets of investors, which most of them on the platform I think have average asset value or average account value I think is still maybe around $10,000 or less on the platform. Like you just can't give those customers that type of stuff. Like you're just burning them. Now, technically it's still okay, but there's some places to catch it. There's some moves on the way down. $5. I love. I mean, I actually have an 8 today. Glasses and drones. I mean, I think robotics is looking good here. There was a company figure that put something out online. They're upping their production there. I think Tesla's probably being a little coy with what they got. Netflix, there's a gap in the chart down to 85. That's probably the first area where I'd want it. I mean, it's hanging on a cliff right now. Wouldn't want to see it retest 74. That's for sure. Because now you've just confirmed lower lows, lower highs. Poet thesis dead? No. But there is massive baggage now. Massive baggage. And look, the company that kicked him to the curb, Marvell, I know the Marvell chart looks amazing. But dude, how many times has Marvell dropped the bag over the years? I mean, look at some of these drops on Marvell. I mean, Marvell here it is. Marvell went from 123 to 46 like in like 6 months. It did the same thing back here where it was 100 and no, it's like 90 and it went to 30 like in a year and a half. This company drops the bag as much as Poet does. So I wouldn't really like look at Marvell and be like, oh my God, Marvell dumped Poet. It must be a disaster. Nah, Marvell is second tier in my opinion. Now it's $138 billion second tier. But I spend all my time listening to Jensen Huang and Hawk Tan. So, and those guys that's like Michael Jordan. Marvell is not even like Scottie Pippen. He's like Steve Kerr coming off the bench. And it's just not that great. The Poet thesis, I wouldn't say is dead, but there's, they're going to have to figure out a way to repump it. I have DOP 100 that I don't know how much that is, but I really appreciate it. Should we buy NVIDIA? I mean, it is set up for a breakout, in my opinion. You've kind of broken out here. I tell you what, you get rejected here, unbelievably great buy opportunity back to 200-day moving average. Rejection gets bought. Even a break higher gets bought. Stop loss underneath that. That's how I play these things. Now, I've owned NVIDIA for a while. I've been buying it in this sideways consolidation, so I'm not doing anything. I'm just letting the baby ride. But this stock has plenty. Everything we saw in the after hours supports that there is so much more room to run because all of these companies that are investing heavily here are printing revenue growth and profits, operating profits, at least in the business that they're doing. So I would ask for the Google CEO. I would personally go to Google's headquarters and then Amazon headquarters and personally ask for those CEOs to get fired if they slow down their spend on a business that is now reaccelerating. Go down to the AWS growth. It's not growing. It is reaccelerating its growth. It was 19, 17, 17, 20, 24, 28. Only a moron, a CEO would cut back or listen to these idiots on X and be like, oh my God, data centers are getting canceled and all this type of stuff. There's so many of these accounts on X. Hedgeye may not be a good example here, although I think they were short Aritza Networks and it went to an all-time high almost instantly. And so some of these accounts, and not that I don't make stupid, I mean, I make a lot of stupid investments too and stupid calls, but a lot of these accounts, they're just posting this to get people to respond to them and get retweets and follows and these types of stuff. Most of these guys don't know what they're talking about. All you have to do, if a business is accelerating in revenue and accelerating in profits, the CEO would be an absolute idiot to not continue to invest there. Folks, any update on the Equity Empire Android app? The problem with the Equity Empire mobile app is freaking Apple is getting so many vibe coded apps that mine has been sitting in approval forever. And I don't know. And I'm hearing, and this is me, I'm a nobody. I'm hearing top level apps, X, Instagram, these types of, the premier of apps. They're having trouble launching updates because Apple is taking so long. Another reason why maybe Tim Cook should be fired, or did get fired. Apple tomorrow, big earnings day for them. If Apple pulls back, I am buying the heck out of this one. I think there's a good chance they put up a great number tomorrow because of hardware sales. Hardware sales are going to surprise to the upside for sure, but it could be priced in. I don't know. But dips here can be bought. What I'll be interested to see too is obviously Tim Cook staying on until September, but do they have the new guy on the call? If they have the new guy on the call, very, 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 very interesting for sure. New to the channel, welcome. Thank you very much. More content coming. We're also on the investor channel. This is like, I wouldn't say this is the sister channel, but on the investor channel, I do a Friday show. I just turned that channel into like the Friday show. And then this channel, I kind of post wherever the hell I want. Yeah, Android app it's going to be ported from, and when I say vibe coded, like I've coded for 25 years. So it's not like I'm like an idiot at these things. I've tried to do mobile apps in the past, and I tended to just stick to web apps. So native inside of a browser. So I'm very like skilled at this. I wouldn't say I'm like, I could get hired at like a mid-tier company to be a programmer or whatever, certainly with the tools that they have now. So I'm a mid-tier, like a C+ in terms of programming. Well, give me Claude Code, and now all of a sudden I'm an A-. And so, but yeah, the Android app is going to be a version of the Apple app, just so when I make changes on one, it applies to both is really the play there. Calls on Apple, I think a move lower can be bought back to the 200-day moving average at 250. A move higher confirms a new higher high, and then you can just buy the dip again. Yeah, I'll see you guys on Friday for sure. I'll see all the paid subscribers tonight. I've got a ton of videos. I actually probably should rest my voice because I will lose it if I keep talking. I live I live like 60 miles from San Francisco. I'm glad I don't live in San Francisco. It's a beautiful city. I love to visit it, but I can't afford to live, and I'd want to live like in Palo Alto, that area. I love that area, but my bank account doesn't go up that high. Tweets make me nervous. Yeah. 5 more years to get full 10 years of work. Keep it going. Keep it going. Yeah. There's the investor channel. Go check that out. Appreciate it. Oklo. I mean, all that stuff is pops and drops with that stuff. I mean, if you're in it and you love it and you got the stomach for it, I don't. I don't even have the stomach for like Marvell and AMD. like even this is too much for me. Even Intel was like, holy shit, what the hell's happening? I'm kind of more like a Broadcom guy. Like I love these charts. These charts are just so soothing. You just, very predictably know when to buy. If you want to sell, kind of tells you when to sell. Schwab, I love Schwab as a product, probably as a stock too. It's probably fine. Thank you guys. Thoughts on memory? Memory's going to have to raise prices. So they're going to have to kill demand. It's probably going to be good for test equipment. What was the one stock I did? Camtech. Remember I did a video on Camtech. Can't remember when I did a video on Camtech. And I was like, I don't know. I had like a hot take on Camtech. I was like, don't buy this stock, buy Camtech. Camtech went down and I got killed in the comments. And it's like 5x from there or whatever that is, 3x from there. So I have some shares of that. I like test equipment. I tell you what, equipment's had a great run. The reason why I'm so confident on NVIDIA is equipment had its run. Okay. Memory had its run. Not saying the run is over, but now what's running? The trash of semiconductors. Intel is running. Texas Instruments. And I'm saying trash respectively here. I own these stocks. Texas Instruments running. Okay. NXPI running. QCOM running. In what world, what universe does QCOM go up double digits? Does Texas Instruments go up double digits? Does Intel go up triple digits? Does all of Semicap, which is all like the equipment makers, in what world do the stock charts look like this and NVIDIA doesn't follow? That wouldn't make any sense in the world. No sense at all for all of those stocks to go on a monster run for this stock to not price. The key with NVIDIA to understand is Wall Street has this stock very well covered. It's very difficult for this company to surprise to the upside. So the risk is to the downside in the short to medium term that the hyperscalers cut off, there's a depression or recession or DeepSeek 2.0 or China does this or whatever. So there's risk to the downside. So it doesn't allow the stock to go up. But at some point, that runs its course. And smart analysts say, well, damn, all of these other stocks have ran. Freaking Marvell has ran. All of these stocks have run. And they've gotten their pump. They've priced in 2027. All of these stocks, this run was pricing in next year. Okay. NVIDIA hasn't priced in next year because when you look at the forward valuation on it, it's lower than all of those stocks. In some cases, lower than those stocks combined. It's 25 times. And their earnings are likely to beat and extend. So more than likely their forward PE, certainly counting like a buyback as well, is probably south of 20. At some point, you have to price 2027 in at a higher valuation so you get higher. Now, over the past year, NVIDIA's stock is up 91%. So it's not like it hasn't done anything. Oklo. I mean, get into Oklo. If you get it, anybody works at any of these companies and you want to shoot me some juice, I'm always listening to hear. Always love to hear people that work at these companies. Yeah, I always watch your Friday updates at 1.5 or 2x. I probably would too. I edit the video in 2x. So I appreciate that. Hit the like button. I appreciate it. Guys, I'm going to go listen to these conference calls. I got some videos. I'm going to get some water on my voice. I really appreciate these are fun times. We'll just run down kind of the performance at the end just to close things out. Amazon is up. Wow, Amazon's up. Jassy is singing Marvin Gaye on the conference call. This thing is up almost 2%. We'll call it 1.5%. That's good. Google, Sundar Pichai. Ever since I said for him to be, sometimes me saying a CEO should get fired, it's like the bottom. So it's either the top or the bottom of the stock. I think I called for Meta to get fired right at the bottom. Yeah, Meta's down 6. Not a big deal. And Microsoft looks like they're about to give guidance, or they did. And the key is you just don't want to retest these areas. Same thing with all of software, like ServiceNow. ServiceNow, like, could be a double bottom, right? I mean, we've got our rosy Ray-Bans on right now. I mean, this chart is disastrous. Could you double bottom down here? And this is this is where you reverse. No signs of that. But taking us out of this sector, I saw Chipotle was up in the after hours. I think they reported their earnings. Good sign. Chipotle, I'm saying it's bottomed. It's still very much in a downtrend, but for the stock to do this in the after hours, good sign. Also, Starbucks. I didn't do a video on it, but I read through the call. Like Starbucks, look at the strength in Starbucks stock. This is a good sign when these stocks that have been struggling maybe a little bit have caught a bid. It's a good sign. It's probably a good sign for the rest of the broader market. And I just think you're on the verge of an Nvidia breakout. Losing big time with Now. Yeah, I was in Now. I got stopped out. I think I lost, I don't know, 10% or something. We got stopped out up here. In my opinion, you've got to cut yourself off. I think we were on that trend with ServiceNow and we got stopped out somewhere up here. Sometimes it doesn't work out. I mean, sometimes you get stopped out and the thing goes up or it reverses and it sucks. But this one, it is what it is. So Bulls. I love Michael Jordan. I was a Laker fan, but I love Lamb Research, LRCX. It's got its pump. I know what the chart's going to look like. Just confirmed a new higher high. What I'm looking for with these stocks is just to sideways consolidate. Then you can get back into them. A pullback on Lamb Research back to the 200-day could be a buying opportunity, back to 180. I know it's at 250. It's like, oh my God, that's a long ways away. But these are big, big moves, pricing in a lot of upside. Profit taking comes, rotates into the other stuff. That's what I'm thinking. Folks, thanks for tuning in. I will see you again on Friday on the main channel. Premium subscribers know I've got a long night. Don't expect all 4 videos to be up anytime soon, but I will do the 4 videos as quickly as I will do them all tonight. But for those of you on the East and West Coast, it probably won't be till 1 or 2 in the morning where they're all up. It does take some time, and I like to go through the calls and make them thorough. I will see you all again very soon. We'll try to do another live. I appreciate you all tuning in, and the support is amazing. I love this industry. I did this for free for a real long time. I still feel like I'm doing it for free, and I would do it for free. And I appreciate. We got a couple super chats as well. Appreciate that on the DraftKings call. I'll tell you what. Just try to hit me up in the comments or something. I'll try to do a DraftKings video. Maybe they do earnings in like 8 days or something. That's honestly when things quiet down for me a little bit. Like after this week, this is a big week for me, but in 8 days, things will quiet down. I'll try to throw up a DraftKings video on the channel. Good or bad, we'll talk about it. I like MGM. I follow the sector. I used to do a lot of fantasy football and those types of things. So I know the product. I'm just not an expert. And this DOP 100, I'm not exactly sure how much money that is, but asthma boy, I hope your asthma is doing good. Mine's rough right now. I'm on that inhaler every day right now, but I appreciate the DOP 100. And I don't think you ever have a bad day buying NVIDIA, at least in the long term. Thanks for tuning in, guys. I'll see you again soon. That's a 2-hour mark. Good luck with your investments.